Well, welcome back to the Small Business Mindset. I'm excited about this conversation today because as I'm an entrepreneur and a small business owner, I love talking to other entrepreneurs and small business owners because they've been in the trenches and they've done the things, they've had success, had failures. But I want to introduce Mike Milligan. Mike is the founder of One Oak Financial, which is a virtual planning firm that prioritizes in each client's individuality. He built the firm to combat the paralysis penalty, a pattern of one size fits all financial advice that leaves people unprepared for Wall Street, insurance, and markets. Mike brings 30 years of experience, a specialized industry degree, and insights from big banks and insurance firms to deliver personalized strategies that protect and grow wealth. Mike is a certified financial planner, adjunct professor at Old Dominion University. He's a podcast host. He's the author of 2 books. He has earned national recognition on CNBC, Fox, ABC, NBC, just to name a few, along with awards in finance and sports coaching. Mike continues to expand One Oak Financial towards B Corp certification and Inc. 5000 recognition while living in San Juan, Puerto Rico with his family. So welcome, Mike.
Well, great. I guess the podcast is over now after that long introduction.
You're done. We already talked
Right.
about you. You can leave.
We've used the whole time. Wow. Well, thanks for that
So, Mike,
introduction.
yeah, you're very welcome. I think it's notable that obviously you have a passion for working with business owners and in this industry, and you have a great wealth of history and experience working in it. But I'm going to ask you a first question. Why did you decide to hone in on why are small businesses important to you?
Well, I mean, my first client was a small business. Like people who really know me well, and I won't tell the whole story here, but people who know me well know that my grandmother was my first client, and she had to build a small business. She had to innovate out of desperation. A small family story for us is, my grandmother, grandfather, or like my heroes. Grandfather owned a construction company. He got cancer, so he had to shut down his company. And Granny was she was a stay-at-home wife, a mother, but she was a great cook. And so the thing she knew how to do well was cook. And she basically started a business where she took collard sandwiches, collard greens between 2 pieces of homemade cornbread that were deep fried, wrapped them up, and she would take them to the construction sites where my grandfather used to work, and she would sell them back in the 1980s for
Okay.
$5. Back then you could go to McDonald's and get a Big Mac for $1, or you can go to
Yeah.
Carl's Jr.'s or Hardee's and get 2 cheeseburgers for $1. But she was selling for $5. She was selling love, but she brought this little 11-year-old kid with her, and so I got to see her sell. I got to be a change handler. I got to help her open her first bank account, and I saw I didn't know it then. I mean, I was just going with granny, but like now I saw like a small business from creation through the end of her life. And she there was a mentor that came along that process when I was about 13 years old. He was the bank manager that I helped my granny open her first account. He was wearing a suit, and the only other person that I knew wore suits back in that time were preacher men. And I
Oh,
did not
okay.
want to be a preacher man, but I did want to wear a suit. And so I asked him, "How do you do this?" And he said, "Well, you go to college." And so sure enough, I went to college. And when I was in college, I fell in love with trust and investment management. So I started working for major banks, wealth management firms. And I did that from 1999 until 2012. And during that time, I realized that the core of America's economy is small businesses. They're
Mhm.
the ones in the community who are literally, when something happens in the community, they're the ones who step up. They're the ones who open up their shops, or they're the ones who cut down trees in major events. They're the ones who, help, feed folks. They're the ones volunteering at churches. They're the ones passing out candy to kids on Halloween, right? Small business is what drives America. They create jobs, and they're the fabric of a community. That's been overstated a little bit, but it's so true.
It's so
And so
true.
like and so I want to help them, right? I want to bring my creativity and my ingenuity for finances to small business owners to help them not make mistakes that so many others have made over the years. The tax code is lined with incentives for hiring people, for operating your business in a properly structured corporate form. And that's difficult to navigate, and I just want to help people navigate there, and then I just want to help them negotiate with the people that are not going to sacrifice their profit. Banks and insurance companies will never sacrifice their profit for a small business, but if you negotiate, you can find yourself with better deals and better opportunities for growth.
Thank
Yeah.
you for telling your story about 11-year-old Mike getting engaged in small business ownership and entrepreneurship with your grandma. That's pretty cool. And I think a lot of us, talking small business owner to small business owner, and those of us listening, I think it has to do with what in your life caused you to go into small business for yourself, because I think it's a risk and it's a lot. And so let me ask you that question. So you were on Mall Street. I imagine you did pretty well, but you took the leap and started your own firm. So where did that ingenuity and excitement come from?
Well, I mean, I had been in boardrooms of major banks and insurance companies, and they start out their meetings, their management meetings or sales teams meetings, and they talk about like who's in the pipeline, and they talk about like profit models, and but they never once talk about like solving needs for clients.
Mm,
It's just not in the fabric of like Wall Street companies, because their ultimate goal is to provide shareholder return
sure.
and to incentivize those who are making that shareholder return happen. And so, like, if you think about like the rank order of what's important in these big Wall Street firms, it's profitability to shareholders, it's board of directors, it's executive managers, and then it's the clients. And I was tired of honestly hearing these rules that just were not happening. Like the stock market returns 8 to 10% year, that you could take 4% safe withdrawal. You could from your assets and never run out of money, and defer taxes. Just keep deferring, 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 and eventually your tax rate will come down. And the reality to that is the market is not a perfect straight line up. That a safe withdrawal strategy is customized to the individual and the life they want to live, and ultimately taxes don't go down in retirement. It's just and so, like, if you want to take control of your taxes, you have to control those first. You have to get, retirement is not a number to get to, like the traditional Wall Street firms say. You don't The goal is not to get to 2.34785 million dollars, right? It's to get to the income you need to live your life that continues to adjust for inflation. And some people can get there at 48, some people can't get there until they're 82, but
Right.
like it's all customized. And so we built like the One Oak brand. What One Oak stands for, one of a kind, because we
Oh,
generally
okay.
feel, yeah, we generally feel that everybody is unique, that they're special, just like my granny was, right? She had a third grade education, but she somehow pieced it together $5 at a time to make, her life as great as she possibly could, my life as great as it could. I mean, I'm here today because of her example and her inspiration. And she lived a one of a kind life. And I want to help people realize their uniqueness, right? And this is especially true, by the way, for small business owners. Small business owners, entrepreneurs, real estate investors, real estate agents, right? Anybody trying to build something on their own, they are unique people, and they need somebody in their corner who adds value. Just doesn't take value from them, but actually adds value to what they're trying to solve for their
Mhm.
for their ultimate clients.
I'm so glad you bring that up. And, my past experience working in corporate America too, I felt like I was a number at the bottom of a spreadsheet. And
Yeah.
I would say that was my motivation too. The clients weren't first, the profitability was first. And I know for me, in working with clients too, as small business owners, I think we have to have our why and our purpose. Like, why do we want to go out and serve our communities, our client base, share that wisdom. But I think the other thing is too, and you bring up a good point, how do you build wealth as a small business owner? And what does that mean? And because wealth can mean X number in the bank, few more zeros in the bank. Wealth doesn't have to be monetary. So when you think about like, how do your clients, how do you define wealth as a small business owner? What are some things that you should look at just beyond your profits and just beyond what you have in the bank?
Yeah, I mean, like, we have 21 employees at One Oak Financial and about another 75, almost 80 contractors that we work with. And I look at like wealth and for like my company, I look at wealth from a global standpoint. Like how many people in my company are meeting their goals and dreams, right? Like I get so excited when like we have a 26-year-old um, financial planning person in our office who had this goal of wanting to move to Nashville. He lives in Detroit, but he wants to move to Nashville. But he wanted to get like student loans paid off, and he wanted to get a new car. Then he wanted to get some savings. And I've actually been able to live and see him accomplish some goals through his work in our company. And so it's not only our clients that get to live the dreams that they want to in a one of a kind way, but like I think wealth for a business owner, small business owner, is I think if you're doing something worthwhile for your community, it's gonna reflect in the employees of your company.
Mm,
And like
mhm.
if they're hitting their goals and their dreams, if they are going on trips, spending time vacation, if they feel empowered to go to their, fourth graders, Thanksgiving celebration, right? If they feel like they can go out and do that, I think you're building a lifestyle of wealth in them because you're giving them freedom. But then, like, the bottom line, I mean, at the end of the day, right? A small business exists to create value, not
Mhm.
only for the clients but also the business owner. The real wealth that comes from owning a small business is your wealth grows when when your business becomes less about you and more about the business. Because real wealth, like your business that you're building, has uh, hopefully what can be sold one day,
Right.
but you can't sell yourself,
Yes.
right? You have to sell the product of what you created, which is your business. Because if you're just selling yourself, if you're a small business owner and the real value of your business is you, then all you do is you own a job. You
Yep.
don't own a business, you own a job. And so, like for instance, a lot of solopreneurs will try to do everything themselves when they could literally create a job in their business and pay somebody, an entry level wage, and then get the business owner to do higher level productivity. And then when that person maxes out, you do the same thing, and then you start promoting inside, and then all of a sudden, after 4 or 5 years, you have a chief operating officer and a director of growth and a client management executive, and then all of a sudden, revenue, maybe not right away, but the percentage of revenue that others bring into the company starts becoming double digits, and then it leaks into 30%. All of a sudden, you got a business that can operate while you are away for 4 weeks or 6 weeks, and it
Wouldn't
will
that be
make the
amazing?
payroll. Yeah, no, and that's when you have wealth, right? And I mean that's when your business is an actual number on your personal financial statement, because it's something that someday somebody will want to buy.
Right.
And
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 so I mean
you don't wanna
I
sell
think
them
that
you because you
no,
you
no, you
wanna
don't want to sell them
go off and
you.
do other things.
Right. And so I mean, I think the wealth you can look at wealth in a small business two ways. Like, are you enhancing the lives of the people that work with you as you grow? And then number two is, can your business operate independent of you at some point in the future? It may not be now, but can you eventually build in systems and processes to eventually make it so that it is there without you? I mean, we have 12,000 people in America turning 65 every day right now.
Wow,
It's
okay.
it yeah, we're at the end of the baby boom age, right? And so they're turning 65 every day, which means there are plumbers and electricians and laundromat owners and convenience store owners and restaurant owners who are turning 65 right now, and their business has value.
It does.
And so there is going to be this new wave of entrepreneurship that doesn't create a business but buys businesses. And I see that as kind of the next big wave of wealth creation in America, because yes, you're going to fund, somebody's retirement by buying their business, but you're also going to be able to take something and almost make like a conglomerate, almost like Warren Buffett did with Berkshire Hathaway.
Hmm.
I mean, there's going to be somebody. The next Warren Buffett is putting small businesses together right now. And, in 60 years, we're going to be talking about them like we talk about Warren Buffett. I have no idea who that is, but somebody's doing that.
Absolutely. I'm so glad you brought up a lot of the trades. I know, I have kids that are in that college age and, trying to figure out what the heck they want to do with their life. And, I'm so glad you brought up I'm gonna call it the unsexy side of business. I think sometimes when we think about entrepreneurship and business ownership, it's pretty, it's flashy, it's, money just comes out of the sky.
Yeah.
But I mean, I would say similar to what I do in my day job, be the commercial real estate side, sometimes the best financial plan is that dirty warehouse that is solid and has a good track record and is income producing. And, so let's flip the switch a little bit. I'm so glad you brought this up because this is really interesting. How can Okay, let me rephrase that. What role does mindset play in business owners and how they handle their money, the risk, the opportunity, and the business growth? I mean, I love you mentioned systems and processes. I love that. But do you think it's a little bit broader than that as far as how they
I
go after it?
I mean, one of the things that I think is we don't ask the question why enough. And why eventually will get to the heart or the root of what you're doing, of why you're doing what you're doing. And
Hmm.
so, I mean, let's just take this. You're like, let's say you're teenage kids going into college, and you say, why do you want to go to college? And they'll say, well, I want to get an education. Well, why do you want to get an education? Because I eventually want to have a job. Why do you want to have a job? Because I want my job to be able to, I want to be able to buy a house and buy things. Why do you want
I don't
things?
want to live with you anymore, mom.
Right, right, right. And, and eventually you ask enough whys, because remember, right? When you have like a 2-year-old kid, remember our 2-year-old kids when they were there, what is their favorite question to ask? Why?
Yeah,
Why?
why?
Why? Why? Why? Why? And so we stop doing that for some reason because we feel like why questions are annoying later on because we're like, man, that 2-year-old. I mean, 2-year-old's just inquisitive. We should remain inquisitive our whole time, but eventually, why gets to the heart of the matter. And for like a 22-year-old, it may be because one day I want to go. I remember going to the lake as a 12-year-old and seeing people on jet skis, and that's what I want for my life. Like I want to be able to go to the lake in the summer and be on jet skis. Well, you know what, folks? I have clients who have dirty jobs Monday through Friday, and then on Saturday and Sunday they're down at the lake on jet skis. They're the ones in the 35-foot boat pulling the skis behind,
Yeah.
right? Or because they work hard Monday through Friday, but they realize the result of that hard work is so that they can go play. The people at the lake are not necessarily attorneys and doctors, right? They're people who have run small businesses who are solving problems, who are fixing air conditioners or fixing leaky pipes.
Hmm.
They're rewiring homes. They're building America, right? They're and we somehow have lost track of like our mindset has been maybe it's social media, maybe it's been the last 25 years of what we see on TV. I have no clue of why, right? Because I'm not a psychologist, but we've somehow lost track of like wealth can be built in so many ways. It's not just through having a podcast or being a TikTok star, but you can build wealth by laying pipe, putting wires in, fixing toilets. I have a friend who's an author named David McKnight, and he's big in the financial space. And he just is in the middle of writing a book called The Society of Millionaires. And the book's going to be out next May, but it's basically like a Christmas carol, right? Where, the ghosts show up, but it's 7 people who are millionaires who just did everyday jobs.
Wow.
Wealth can be built slow, like if you want to work somebody, but wealth can also be built slow as an entrepreneur, as a business owner. If you get into a business that solves real problems and you have something unique to be able to solve those. And problems could be, my car is broken and I need somebody to fix it. I need my oil changed. My plumbing needs to be fixed. I mean, there's so many things. I need to get my hair cut. There's millionaires doing all of those jobs who have built businesses. And then what people that become multimillionaires, they not only did it, but they also now have people up under them who are doing it too, who will never take the risk to own a
Right.
business. And so, I mean, that's why like having a, being brave enough to create jobs for people. If you could be a good manager or have a good team around you, you could build extraordinary wealth. If you get your mindset that, you know, um, an employee is not an expense, it's an investment, right? And an employee can be an investment just like Nvidia stock or Amazon stock,
Hmm.
right? Because if you invest in that person and they multiply the efforts or multiply the revenue of what you're paying them, it's an investment. It's not an expense. And it's just that's where the mindset has to shift is employees are not expenses. And if they are expenses, then you didn't necessarily need that employee, right?
Right. Or you didn't
So
invest in the time to train them and bring them on and delegate to them.
correct.
Yeah. You brought up something you just said a minute or so ago, as far as building wealth sometimes can be slow. And I'm finding that a lot of younger people coming into the workforce, they want it fast. And I think they see because of social media that, oh, wealth happens fast. Well, for very few people. What is your advice on that? How can they build wealth faster?
I mean, um, how can you build wealth faster? Man, I mean, if I'm either getting ready to say something completely genius or I'm gonna just flub through it, one of the two. But like, I mean, if you want to build wealth fast, you have to take huge risk and you have to be willing to fail. And
Yeah.
so like you know the old school pendulum, right? That like just keeps time and it just goes back and forth.
Mhm.
And you can make it go faster or slower. But then what's interesting about that pendulum is as far as it goes one way, the reaction's going to take it the other way. So if you want to grow wealth really fast, you have to take big risk. There is no risk. And listen, it's okay to fail, right?
Yep.
So I know many people who have failed and lost seven figures and eight figures on a business,
Mhm.
but they got themselves up because they could do it again. I mean, you ask anybody that's got eight or nine figures, would they give that eight or nine figures up to get an additional 10 or 12 or 15 years of life? And they would say yes. And you know why they say
Mhm.
yes is they know that they can build it again,
Yep.
right? But what they can't get back is time. And so if you want to build wealth fast, you have to take big risk. But if you're going to take the big risk, this is the financial planner in me now. If you're going to take the big risk over here to grow wealth fast, you better have a safety net,
Yep.
right? And that
Yep.
and that safety net could be like a family that you're not risking their livelihood, or their comfort and safety to do that. You know, but you got to have some kind of safety net in place, whether it's a couch you can go sleep on, or family who
Right.
will feed you the next meal. But like, if you want to grow it fast, do that, right? Take a big
Yeah.
risk. And I've seen there's a guy out there who just sold $103 million of books, Alex Hormozy, right? In a weekend sold $103 million of books, and he did it through proper planning, but he took a risk. He told people what he wanted to do. And luckily, through a lot of publicity and getting there, he did it. But if you read that guy's story back in 2017 or 18, so not that long ago, he was one deal away from being totally bankrupt. And I mean,
Mhm.
he had no money, but he was one deal away. And now look at him; he sells $100 million on a
Yeah.
weekend. So I mean, if you want to grow it fast, take a big risk. But I'm telling you, wealth that is built slow is appreciated much more than like the lottery ticket win, right? Pe-
Oh,
people who
absolutely.
people
Yeah.
who build it fast are in general not going to sustain it because now they get a rush, right? It's a dopamine rush, and so they're going to risk it all again. And you stack risk after risk after risk after risk. Sooner or later, it's not going to work out. But that's my hot take on how you build
That's
it
really
fast.
good, and I in the commercial real estate world, as I'm working with small business owners, especially if they're getting started, and I ask them the why question, like, "Why you wanna do this?" And usually it starts with similar to your grandma, "I'm really good at
Yep.
making this thing," right? And I'm like, that's awesome. And the business side is not always there, but they have this star in their eyes. And I love that they're betting on themselves, which I think is probably one of the most important things you have to do if you're going to go into business for yourself, is believe so inherently in yourself that you're going to do whatever it takes to make sure this business succeeds. But then what I have to temper back sometimes is that, okay, so you have the idea for the, let's use sandwich shop, and you see this cute little store downtown, and they want to throw all this cash towards it to making it look pretty, and the signage or the lights or the displays. And I'm like, whoa, 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 whoa. You're not going to make any money. And I think, but they kind of temper that with, well, but I love what I do and I'm good at what I do. People are just going to automatically buy from me. And I feel like sometimes that's the disconnect of, yes, you have to do capital outlay sometimes to get started, but making those investments wisely. I'm so glad you brought up the safety net. Even I have a safety net. I mean, it's great to have the, what if, what if, what if. Sometimes it's not business failing. Sometimes it's a personal crisis. It's a healthcare thing. It's a family member thing. It's, whatever it is, but preparing for those rainy days. So you're right. So you still have a roof over your head and you can keep the lights on, I think is inherently important.
Yeah, and some of the things that'll happen are totally outside of your control, like the federal government shuts down, or
Hey,
a financial crisis comes, or
yeah,
COVID
yeah.
happened, right? And I mean, those are just the last few years, not to mention like what happened in the
Mhm.
early part of the 19th and 20th century. Holy cow! But I mean,
Yep.
you're exactly right. I mean, like there's a lot of people with dreams that don't realize they just don't realize that a a great product is not guarantee success. Like a
It's true.
great sandwich doesn't mean that it's going to sell, right? Because it's equal part, just like any great food recipe. What makes a good meal is that it's balanced. What makes a good business is that it's equal part really good product, it's equal part great marketing, and then you gotta think that some of that is luck, right? Just
I
being
do.
in the right place at the right time. And if you're just banking on having the best product out there, there's a lot of products that are not good. I talk about this in the music industry a lot, by the way, because if you ever go to Austin, Texas, or Nashville, and you
Mhm.
walk down where folks are singing and you hear them singing, you're like, how in the world are those people not, at a minimum, like on The Voice or American
Right.
Idol, or,
Yeah.
why are they not on the radio? Well, there's a lot of luck, right? It's not just about having the talent to sing. It's also having the ability to write music, the connections to be able to connect with people, and then having a team behind you who can actually get you on the radio. But I mean, there's
Mhm.
a lot of great singers out there that we're never going to hear from. And it's the same way with a lot of people who build products, right? If there's a lot of products that are bought by big companies with the full intention to just put them on a shelf and never be used because it
Wow.
would cut into the profit of their company. And so, I
Uh-huh.
mean, the business mindset you have to have around here is you have to be like a Swiss Army knife in the entrepreneur space. You have to be able to do many things, and the things you're not good at, you need to put some capital to getting really talented people around you to help with that.
Mhm, mhm. That's great advice. I'm gonna go back to a little bit earlier conversation we were talking about, and that's, we have baby boomers retiring. Let's talk about succession planning. And I'm so glad you brought this up as far as, if you're a business owner, I hope your goal is to build an organization that you can sell, and that doesn't mean you. So at what stage really should business owners start thinking about succession planning, whether it's an exit strategy or selling their company? I mean, if that's part of their overall wealth plan or retirement plan, how early is too early to start thinking about?
Well, I'm 49 years old, and I have
Me too.
sold two. How are you? That's it. Neat.
Yeah,
What month?
February.
I'm September, so there you go. That's interesting. But when I built things you find out live on a podcast,
Get that?
um, what when I sold two other financial planning practices before the one I have now. And I sold both of them, not necessarily from like wanting to sell that I needed to sell because they got a little bit too big for my capabilities of managing. And so when I put One Oak Financial together, I put it with the desire to eventually have business partners in it. Um, and specifically women business owners
Okay.
with me, because there's a gap in the financial planning space where women are not elevated as financial planners. It's mostly just old white men. And I saw like a need for that, and I wanted to not only build a firm that's one of a kind, like one of a kind financial for to serve the client, but also one of a kind in what we look like to the general public. And so I'm 49 and I'm thinking about succession planning, and I have no plans to get out of the business for 25, 30 years. But I'm starting to think about succession planning now. I think about like what happens if tomorrow I'm in a car wreck,
Yeah.
right? Because what I've built, I want to live on beyond me. And so, I have a life insurance in place, a key man life insurance policy where if something happens to me, the business is funded to run, for all the expenses for 2 years. So the management team in place now can find suitable financial planners to come in and they can start running it without me. So like I'm doing that now. But the other thing is the way I structure, I think about like incentive pay. I think of like, well, if I make incentive pay too much now, it could constrict growth in the future, right? Because the more income we make, the higher the payouts are to the current employees, which means I can't bring on future employees.
Mhm.
And so, I think if you're building a business, the best time to think about succession planning is now, right? Not 20 years from now. It's that whole adage, when's the best time to plant a fruit tree? Well, 20 years ago.
Right. Or right now.
When's the
Yeah.
yeah, or right now, one of the two. It's like, so if you're thinking about succession planning, it's now, right? If you have something that you really want to live on and be your legacy, you want it to be a second or a third generation company. That means something now that it did 25 years ago. Second or third generation doesn't mean your kids are involved. It means just it's the next generation of leaders and the third generation of leaders. And if you want that there, you got to start putting things in place now. And you got to have something in place where, oops, I'm no longer here, right? Death, or oops, disabled. How can this business run? But then you start to really build a business. You don't want to like sell it to somebody who hasn't helped build the business. So you want to create leaders in your business that ultimately one day, either through a gift or a buy-in strategy, they can buy into your business. And there's so many things like employee stock ownership plans. There's buy-sell agreements. These things that may seem complicated, that are actually, when you talk to somebody who is doing it, is pretty simple.
Right.
And so, I mean, there's a lot of again Wall Street companies and employee attorneys who are putting this stuff together, but they never actually signed the front of the check. They only signed the back of the check. And they don't understand what you're doing from a standpoint as a business owner. Like you mentioned earlier, I live in San Juan, Puerto Rico. Well, I mean, I live in San Juan for two very big reasons. One is it's just beautiful down here, right? The food's great. I live on a beach. It's fantastic. And that's probably about 10% of the reason I live here. The second reason I live here is to build on to build enterprise value. Because as a closely held business, my taxes run through a pass-through entity, LLC S corp
Mhm.
entity, like so
Yep.
many others. Well, uh, revenue that I make from working here, my product, like I've written books, and I teach from here, I coach from here. I have, I'm the chairman of our company, right? So my time in Puerto Rico that I bring value to One Oak Financial is money that One Oak Financial sends to me in Puerto Rico. And I don't have to pay federal tax on that money because it's Puerto Rican source money. I only paid 2% tax here. So instead of paying 37% federal tax, 5.25% state tax, so 42 and a quarter percent tax, I pay two. That adds value to the
Does.
business,
Yeah.
right? And so, that's another wealth hack, right? There's loopholes within the tax code that if you really want to build a business and build value, especially with the idea on succession in the future, well, your value is based on EBITDA, earnings before interest, tax, and depreciation, right?
Mhm.
So, and amortization. So it's all based on like the profit. Well, if you want to have more profit, find ways to cut your biggest expenses, taxes being your biggest
Right.
expense. And so we all, I mean, there's, if you find on the succession question, if you find somebody with the same mindset you have about succession, bring them on as an advisor. Build a community of people who are looking to do the same thing. And what you're going to find is everybody has some strategies. But what you may also find in there is you may find the person who's going to buy your business,
Mm,
and that's even more a friendly deal doesn't is not as negotiated as hard as more of an outsider deal.
mhm,
So start building your community now versus waiting until the end. And again, peak 65, 12,000 people turning 65 every day. People that are holding on to business now, in 10 years, it's going to be peak 75, right? There's going to be more people turning 75 in 10 years. 10
right,
years after that,
right.
there'll be more 85-year-olds. And so if you're holding on to business and everybody is doing the same thing, valuations will eventually start coming down because the market is saturated with businesses for sale. So
That's really good
do it.
advice.
Yeah,
Yeah.
do it sooner than later.
So, in addition to building a business that hopefully you can sell and has value there, what other advice, and this is where you put your financial planning hat on. So, if you are an entrepreneur, you're a business owner, where else should you be diversifying your assets? And I'm talking about retirement plans or other financial strategies. I know myself, I own the company. I also own real estate that's income producing, but I also have investments. And so what advice would you give, especially if you're getting started? How do you think about future planning, future assets, where to place them?
Yeah, so there obviously are some tax benefits to be able to creating like a retirement plan in your business. Depending on what your income level is, whether that's a SEP IRA or a solo 401k, depending on how
Hmm.
many employees you have and what the expense is, you know, we as business owners, uh, if you're rather successful, you're paying pretty high taxes in the United States because it runs through the tax brackets really quick. And so you have to use some strategies, right? So like a 401k, solo 401k, SEP IRA, simple IRA is a way to do some tax deferral. And then, and remember, those strategies, 401k, SEP, and simple, are just tax strategies. They're not investments because then you have to go in and pick the right investments for growth. And the longer your time horizon is, so like for us at 49 years old, we're not going to need the money hopefully for 20 years. And so you have to take risk in the market. And if you have a long time horizon, right, 10 or more years, well, the market really doesn't have risk. I mean, if you look at the stock market dating back to the Great Depression almost 100 years ago, if something goes down, it recovers within 10 years. And so as long as you're adding to it, dollar cost averaging into it over time, you're going to end up buying at lower points and end up having a bigger balance. And there's a couple elements to like that stock market approach using retirement funds. Is there's the money you contribute. There could be some money that the business contributes on your behalf that are beyond employee contributions. But the
Hmm.
biggest component of that ending balance is not going to be what you contribute or the business contribute. It's going to be the growth. And so you have to just get your investments right. So having like, saving money for yourself for the future in a retirement plan is critical. Having money that's like an emergency, right? That buffer, relatively accessible, quick money is a must for a business owner. And financial planners will tell everybody to have 3 to 6 months of living expenses. For an entrepreneur, it really needs to be 6 months to a year,
Yep. Yep.
because we have more risk, right? The first, if you have employees, the first thing you'll do to keep your business going is you'll stop taking an income, right? If you believe in your product and your business so much, you'll stop taking an income, but you still got to live. You still got personal bills to pay on top of the business. So you have to have an emergency fund. I love real estate investing. I absolutely love it. I hate being a landlord. That's not for me.
Yeah. Yeah.
That's not for me. My wife and I, we've done that before. That's not our thing,
You mean you
right?
don't
But
like, clearing toilets in the middle of the night or,
I,
responding to, yeah,
I don't like Sunday morning calls that we're locked out of our place. I don't like the move out process where when am I getting my deposit back? I don't like that stuff,
Yeah.
right?
Yeah.
So we own commercial property. We own
Mhm.
our headquarters in Norfolk, Virginia. We're looking for our corporate offices go from Norfolk all the way to Honolulu, and we're looking for a space in Honolulu right now. You want to talk about a crazy market.
I can only
We're looking
imagine.
for a space there to have a physical office for operations staff to be there.
Mhm.
But we love real estate. And then if you think about like, so if you've got some in the market that's in retirement accounts, I also love having people have some in the market that is just in a brokerage account,
Hmm,
right?
okay.
Because the great thing about funding your retirement and then having some in the market that's in a brokerage account is you can start leveraging that if you need to, right? So you can in the market, growth rates historically have been 10 to 13 depending on what time period you're in. But if you can put money in a brokerage account, you can leverage it. There's tax favorable treatment because of qualified dividends and capital gains. But then you could also leverage it. I mean, you could take like a margin loan, you could take an asset based loan out of it. And, today you could pay it at 5.5%. So if you're getting, a 10% growth and a 5.5% loan rate, well, that's arbitrage. And
Mhm,
I mean,
mhm.
that's using other people's money for growth, and that's what we like to see happen. That's how you build wealth. And there's other things that I like to have. I like Bitcoin. I don't like a lot of it,
Oh,
but I
interesting.
think
Okay, I was gonna bring
one.
up crypto, so yeah,
Yeah,
talk about
I
that.
think I think I think 1 to 2% of your overall total assets in Bitcoin, not to trade, right? I just think to have it. Because I mean, back during COVID, Bitcoin got down to 13,000 per Bitcoin, and everybody was saying it's going to 100,000, and you could read the writing on the wall, right? I mean, it's going there, right? You just know it, and then like now, so it did. It got to $100,000 in 5 years, and you think about a $13,000 investment. Like if you own one Bitcoin to go to 100,000 in 5 years, that's a significant return on investment. Well,
Mhm.
Bitcoin, everybody's saying it's going to $1 million, and I believe it. I mean, I don't think it's I don't think this is like some tulip thing from the 1700s. I don't think it's Enron. I don't there's things about Bitcoin that you can't explain, like who actually created it, what's the purpose behind it. I mean, there's some things but we don't have to fully understand like the origin of something to profit off of it.
Mm,
And
mhm.
that's the thing is like, remember, we're profiting off of that. We're not trying to discover what its original intent was. We just want to make a profit. So I think 1 to 2% in Bitcoin is a good allocation. And then I love like for an entrepreneur, the greatest investment you're ever going to have is into your business. I mean, the rate of return that comes from that. And so if you see opportunities to invest in your business, don't invest just to invest. You invest with the idea that it can exponentially return money over a period of time. And if you can invest in your business, you do it. And if that's people, if that's new technology, if that's buying a new building for your business, you do that. Going from one location to two locations or two locations to four, that investment, as long as you can staff it and run it and keep your profit margins up, that's going to give you a better return than what like a high yield savings account is, or
Right.
other things in your in your
Glad you
in your
brought that
pool.
up. I know. So I was in banking before I was in real estate, and I was in banking at the time of 2007, 2008. And I know I saw a lot of small business owners go out of business. And kind of on this same topic, I think it's almost like they saw the bubble and they didn't realize that, okay, sometimes the bubble's going to burst and something's going to happen. Probably not as devastatingly as it did, but I saw people go through enormous amounts of growth. And it's almost like they were just throwing money at the wall. Like, hey, we gotta add this, office here. We gotta add this staff. We gotta add. I felt like the companies that survived that were solid. We're looking at risk, but maybe they took more calculated risks. And so talk us through that. What was your perspective at that time? And, kind of lessons learned from that as far as, how aggressively should we consider growing, knowing that there's going to be some corrections at some time?
Well, we can run our own numbers in our business, and what's interesting, some people are overly optimistic, some people are overly pessimistic. Pessimistic people generally, when they run numbers in a situation like that, are going to blow their numbers out of the water. Optimistic people are probably going to underperform what they originally thought. So like whenever you're going through a situation that's beyond your control, like that's outside of like your, we used to talk in terms of like strengths, weaknesses, opportunities, and threat. Do you remember that from the
Yeah,
old
SWOT
marketing
analysis,
days?
absolutely.
Yeah. Yeah. Nobody does that anymore, right? We
Yeah.
don't, we don't talk about that, but you want to talk about bringing an oldie but a goodie up. If you're trying to analyze strengths and weaknesses or what I can control, opportunities and threats are outside. Right. And like if you just do like most people call it a pros and cons list. If you do strengths, weaknesses, things I can control, opportunities and threats, things outside of my control, and you list all of that out, um, and then you put some numbers beside of it, and then start asking, why do I want to do this? Will it change my life? Will it cost me something else? Right? Because we can do anything. There's in our life, we can absolutely do anything we want to. But the thing is we cannot do everything
Mm.
because when you go down one path, you're giving up another path along the way. It's impossible to do it all. And so, I mean, I think if you do depending on where you are in the context of your business, if you do a SWOT analysis and then realize, if I do this, what am I giving up? And is it okay if I give this up for a season of time? It'll make your decisions better no matter what's going on externally, right? As long as you know
Mhm.
what the external threats are, right? So you're not blindsided and surprised by them, then you could take advantage of strategic opportunity as it comes.
You bring up a good point as far as you can't be good at every single thing. I think it's very common, especially when you're starting out and trying to grow a business, you want to be a one size fits all for everything. You just
Yeah.
want the deals to come in. What advice would you have to give as far as, okay, really focusing on what you do best and being okay with, sending business elsewhere?
The sooner you realize that, the more your stress will go down.
Yeah.
I mean, it's just like being one size fits all. I had a gentleman early in my career who left. I was also in banking, and he left banking, and I inherited a large book of business because of that. He left to start like a commercial insurance practice for himself. And when he did it, I asked him, I said, "Hey, what do you specialize?" Because there's niches and riches, or
Hmm.
there's riches and niches. And he said, "I'm
Yes.
just doing everything." And I'm like, to me, it always stuck with me. I'll always remember that because I still see him. He's doing okay, but I still see him struggling right out there. Right, he's always struggling for the next deal because he says yes to every appointment. And the thing is you got to realize where your true value is, and if your value is in servicing, um, teachers and educators, and then all of a sudden an attorney pops on your calendar, you probably want to say no to that attorney. Because if your main thing is handymen are a blessing to us all, right? Somebody who can come in and do 3 or 4 projects in our house right away. It's an amazing gift, right? But we don't necessarily call handymen to replace our full air conditioning system,
Right.
right? Because there's such specialization in that. And air conditioning folks generally make more money than handymen do. So what you have to do is like, do you want to kind of level up along the way? And if you level up, just find what your niche is, and your niche is going to define what you say yes and no to. We talk about this in the budgeting because I do teach at a university too, and I teach a personal financial planning class, and I tell people to create a budget, right? Because if you create a budget, that is what says no to what you can and can't do. Because if it's not in the budget, it's no, right?
Hmm.
It's the same thing in a business. Like if you know where your business is going, what your vision, mission, and values are, and something falls outside of the vision, mission, and values of what you're trying to do, well, guess what? You say no to it because your yes means nothing unless you have the ability to say no.
Ooh, that's great advice. That's great advice. And you bring up mission and purpose and values and how you run your business. I think in my experience, I have a lot of business owners and clients that haven't put the time to put that together, and how amazingly important that is to make sure you're all driving in the same direction. What have you found in working with business owners as far as, you could have a profitable business, you could have a great product or service or a method or marketing, but if you don't have the culture component, how does that impact your business success?
Well, it's just there's going to be if you don't have a good culture, there's just going to be a lot of stop and goes along the way. I mean, you're going to be going really well, and then all of a sudden you're going to stop because you lose a key employee. and then you have to go reverse a little bit, hire somebody, and you're gonna go again for a good time, and then you're gonna stop. So like without a good culture, it's just a stop and go business. And yeah, I mean, you're never gonna break through. I mean, if you break through, it's going to be because you're doing all the work, and if you're doing all the work, then the wealth of the business is you. And as we had that conversation earlier. So if
Yeah.
you don't want to like have stop and goes in your business, well, you just probably want to stop a little bit first and create the culture, right? Like for us in our business, it's profit with purpose is one of our key. Our first value is people are first. So people first mentality. We're always going to be a fiduciary, and we're always going to have purpose with a profit with purpose. So it's not profit first, meaning we don't chase deals. We're gonna make a profit based off of what is purpose aligned with what our business is.
Hmm. Hmm. That's wonderful. As we wrap up today, I have one final question to ask you, and it's a big one. So, if you could give one piece of advice to a business owner who wants to turn their hard work into lasting wealth, what would it be?
I mean, I can go philosophical, or I can go very practical, and I think
Let's
I'll
do
do both
both.
if you don't
Yeah.
mind. Yeah.
Yeah. Please do.
The first thing I would tell you on the very practical side is pay your taxes.
Mm,
I mean,
yes.
the thing that kills business owners more than anything else is the IRS.
Hmm.
Is It could be state, it could be
Hmm.
unemployment taxes. It's not sending your FICA taxes for your employees off to the IRS. That kills your business, and it ultimately would kill you. So, like practically, it's pay your taxes. And as a if you're a solopreneur, by the way, uh, just because you get a 1099 payment, like a large commission check in, that money's not all yours.
Nope,
And
it's
this
not.
and the sooner you realize that, the better off you're going to be. And there's a lot of strategies, but if there's a solopreneur listening, you and I never talk, your 1099 should be a third, a third, a third, a third for business expenses, a third for taxes, a third to live on. That's about the simplest formula I can give you. But if you do that, you're going to be fine in life. A third, a third, a third. Taxes, business growth, business expenses, and pay yourself. If you want like a philosophical side, um, is I would say that you need to realize you are unique. I live in this world, and maybe it's a fairy tale world, but I don't think so because of all the people who are coming beside of me in my journey. I live in this world where everybody is unique and they have a talent to bring to the table, and you also have that as a small business owner. And when you don't try to mimic, we used to call it don't follow the Joneses, right? Don't try to keep up with the Joneses.
Hmm.
Now, like my motto is that if if you never miss a moment, you understand your uniqueness, and you're content on just being one of a kind, you could do anything. And I mean, there is no limits for people who will embrace who they are, because the world, you're here for a reason. And whether you're a religious person or a spiritual person or a man, this is all random, right? Whatever, however you feel about your place on this earth, you are literally one of a kind. Nobody else is like you. And if you don't give yourself who you are to this earth, well, then you've robbed the earth of that uniqueness. And so people who are running businesses, be unique, be quirky, dance in the middle of the day, right? If that's your personality, say what you're feeling, right? At all times, even if it's to a client, right? Surprise people, right? With your personality, and celebrate the wins, very short, and then in the failures, spend time finding out why you're there. And if you embrace the uniqueness and you do that, I mean, my goodness, at the end of it, how could you not really be successful?
I love it. Mike, that was a great answer. So thank you so much for your time. I think we could probably talk for another hour or two on all
You're
the
welcome.
things.
Me
I'm
too.
going to put in the show notes for our listeners all the ways to get connected with Mike. I hope you follow him online. I hope you listen to his podcast, pick up his books, and connect with him at One Oak Financial. So, Mike, thank you very much for joining us today.
It was absolutely been a pleasure.